Hello, my wonderful family. Welcome to today's awesome meeting. Welcome to today's awesome class. Today, we're going to be talking about something very important in the Forex market. Probably you've been trading it and it has not been yielding profit as expected. You trade it, or you've been trading it, you give profit today, you lose tomorrow, give profit today, you lose tomorrow. So today is a very wonderful topic that whenever you add it to your strategy, it's going to yield a whole lot of results for you, known as the relative strength index, also known as the RSI in the Forex market. RSI in the Forex market. So before I go ahead, if today is your first time visiting this channel, do well to subscribe, like, share to your friends so that by the time we upload more videos, you will receive them at ease. So relative strength index. The truth is some persons have been trading it, giving profit today, making loss the next day, giving profit today, making loss the next day. And some persons have been trading it, and all they've been seeing is loss. So today I'm gonna be showing you how not to trade RSI and how to trade RSI. So after today's class, it's going to be easier for you. RSI is going to be a piece of cake for you. So we move to the next thing. We have things to note using RSI. Things to note using RSI. Number one, RSI is a trend indicator in the Forex market. RSI is a trend indicator. You should be able to know that it's an indicator, or you say it's an oscillator in the Forex market. It's an oscillator in the Forex market. Number two, can be used to spot overbought and oversold zones in the Forex market. Can be used to spot overbought and oversold zones. So this is the major area most persons use RSI. This is the major strategy, or how people use RSI. 70 to 80% of traders make use of the overbought and oversold zones. That's why they use RSI. But the truth is, how many persons are making profit? How many of them are making it using this overbought and oversold? That Mr. A is making money using overbought and oversold zones, that does not mean Mr. B will also make money using an overbought and oversold zones. If you check around, money traders have lost money trading the overbought and oversold zones because they don't understand how to trade it. You can actually trade overbought and oversold, but the most important thing is to understand how to trade it. So what does the overbought mean, and what does the oversold mean rather? So you see a market that is buying. It gets to a point they say this particular market is overbought. So how do you know that this market is overbought? And when a market is overbought, by default you think of shorting the market or selling the market. And when a market is oversold, selling is oversold, by default you think of buying the market. So RSI can be used to spot overbought and oversold zones at ease without stressing yourself. But there is this particular thing that most traders do that makes it not to yield profit for them, which I'm going to share with you. And for you to spot overbought and oversold zones, these are the things you have to do. Don't tell anybody. It's a secret I'm showing you right now. Don't tell anybody. For you to be profitable, these are the things you got to do using spotting the overbought and oversold zones for it to work for you. At least 90% of the time, 80 to 90% of the time, you see it yielding a lot of profit for you. So things to note before rules in trading overbought and oversold zones. For you to trade an overbought and oversold zones, number one, only sell an overbought market when the market is in a downtrend. We'll share this on the chart. I will show us on the chart. So it's a gradual process. Only sell an overbought market when the market is in a downtrend. Don't go selling an overbought market when the market is in an uptrend. No, that's a mistake. One of the mistakes most traders make that makes it not to be profitable for them. That's the major mistake most traders make. Only sell an overbought market when the market is in a downtrend. So the market must be selling, making lower lows, lower highs and lower lows, lower highs and lower lows. Then, and probably as a result of retracement, the market gets to the overbought zone. Now that's when you start thinking of shorting the market. We'll spot that on the chart. These are the rules before spotting it on the chart. Number 2, only buy an oversold market when the market is in an uptrend. You don't go buying an oversold market when the market is in a downtrend. No, you only buy an oversold market when the market is in an uptrend. That's when you buy an oversold market. So that's number 2 rule. Only sell an overbought market when chart patterns indicate for a sell and when you have a candlestick confirmation. These are the rules I'm trying to give us. So what is he trying to tell us? That a market is overbought. That does not mean you should just go. Even though the market is in a downtrend, that does not mean you should just go start selling. No. Make sure that it has given you a chart formation showing that the market will still sell. Probably giving you a normal double top, giving you your head and shoulder pattern, showing that this market will sell. Not only that, with a candlestick confirmation. If chart and the candlestick criteria are not met, you shouldn't sell the market when the market is overbought. So it works hand in hand with chart pattern. For you to trade RSI properly, you have to merge it with your chart pattern for it to work for you. Number 4, only buy an overbought market when the chart patterns indicate for a buy and when you have a candlestick confirmation. Only buy an oversold. This is not overbought but oversold. So all you got to do is to erase this, putting oversold in it. So only buy an oversold market when the chart patterns indicate for a buy and when you have a candlestick confirmation. So it's the direct opposite of the number 3. Before you say you want to buy a market that is oversold, it should correlate with chart patterns. Chart patterns should be able to tell you to buy the market. That means the market must have been selling. Yes, probably giving you a candlestick, the W pattern or the double bottom pattern or inverse head and shoulder or any particular pattern showing that the market will buy. And you must have a confirmation for a buy using candlesticks in the Forex market. So let's move over to the chart to see what I'm trying to show us. So this is the Forex market. So for those of us using either the MT4 or the MT5, so by default this is how your platform looks like. So this is where you find the RSI. This is GU, GBP USD. So you go to your indicator list, look at it, this particular place, indicator list. So you click, you can see you come to oscillators. When you come to oscillators, you're going to see so many options like the relative strength index, which simply means the RSI. Now this relative strength index by default comes with a period of 14. The relative strength index by default comes with a period of 14. Now the levels, you can decide to add more levels. Like you can see description, by default it comes with 50, 70 and 30. But I added 30, 70, 80. If you want to add more levels, all you got to do, let's say I want to add more levels here. I want to add 95. All I got to do, let me delete these ones first. So because this one's already added on my chart. These ones are already added on my chart. So we have to show us the way it is by default when it comes to us. So let me see. This. Okay. So it comes like this. This is how it is with a period. I told the RSI has a moving average in it with a period 14. So after that, I okay it. So this is how it looks like without your editing or you adding more levels. It comes with level 70 here. You can see 70. I believe you can see 70 where my cursor is. It comes with 50. I believe you can see 50. It comes with 30. I believe you can see 30. 30, 50, 70. So these are the levels, the natural levels it comes with. You can now decide to add more levels if you wish. But looking at this, you will find out that whatever RSI does or whatever market is doing, the RSI will do same. If market is coming down, or when market is coming down, you see the RSI coming down. You see the RSI. When market is going up, when RSI is going up, or when the market is going up, you find the RSI going up too. So we want to know, how do we spot overbought, oversold zones? Naturally, before I go ahead, note this based on the rules I give. A market is said to be overbought. You can see just like this. When whatever market is doing, RSI does the same. Let me open for another particular chart. Let's go for the USD card. Let's go for the USD card. So I do the same. I go to the RSI. I okay it. So you can see whatever the market is doing, RSI will do same. Whatever the market is doing, RSI will do same. If the market is selling, RSI will sell. If the market is buying, RSI will do the same. Now, a market is said to be overbought when it crosses 70 level. You can see 70 here. This is where I want us to consider. So when the market crosses 70 and above, the market is said to be overbought. And when the market crosses 30 and below, the market is said to be oversold. I come again. When the market crosses 70 and above, the market is said to be overbought. And when the market crosses this 30 level here, below, the market is said to be oversold, based on the rules I gave. And that is why you see the market moving. That is why you see the market, whenever market gets close to 30, just within that range, it goes back. Close to 70, just within that range, it goes back. Comes close to 30, just within the range, it goes up. Close to 70, it finds it difficult to break 70. It finds it difficult to break 30. You can see 30 level here. You can see the 30 level here. 30, it finds it difficult to break below. It finds it difficult to break above. So you can see this 70 level, it comes down. 30 level, it goes above. 70 level, it comes down. 30 level, it goes above. So market finds it difficult. So a market is said to be overbought when it's at 70 and above, and when it's 30 below, is said to be oversold. Now that a market is at 70 and above does not mean, which simply shows that the market is overbought, does not mean you should go selling the market. Remember the rules. Number one rule: only sell an overbought market when the market is in a downtrend. So you have to consider, is this market that is overbought, or is this RSI that is overbought? This RSI that is overbought, is it in a downtrending market? Number two rule, you can see it there: only buy an oversold market when the market is in an uptrend. Just the same thing I'm trying to say. that an RSI is at 30 below, that does not mean you buy it. Only buy a market that RSI is 30 below when the market is in an uptrend. So that is what you are trying to establish here. However, you can also go ahead, add more levels here. So 70. Some persons, even when the market is in a downtrend, they are doing the right thing and the market is overbought at 70. They still wait till it gets to 80. There are sometimes market can will pass 70, getting to 80, can even get to 90 something percent. So some persons are very conservative that they can leave their trade or RSI to get to those levels. So this is what I'm trying to say. All I do now is to add more levels. So I go ahead to add more levels. So I click on add. So you can as well add more levels. So I can add my, since I have 70, I can add my 80. So I can add my 80. So I click on add. I can add my 90. I click on add. I can add, since we have 30, I can add 20. I click on add. I can add 10. I can add 10. So all I do is to OK it. So you can now see those levels I just added. We don't only have 70 here, we have 80, we have 90, we have 30, 20. So some persons, even when they obey the rules, remember that a market that is overbought, that's 70 and above, must also give you chart pattern confirmation. It must correlate with your chart pattern. It must correlate with your chart pattern for a sell. Then the chart pattern must tell you this market is due for a sell, and candlestick too. And that is how it is too for a buying market when the market is oversold. So this is it. So some persons naturally, professionally, they tell you when the market is 70 and above. But some persons will also wait for the market to get to 80. Some persons will wait for the market to get to 80 something percent. It's not about the market getting to 80, or it's not about the market getting to 90%. The most important thing is the chart telling you, or does it have a candlestick confirmation telling you to sell the market? Is the chart or the candlestick telling you to sell the market? Does it have a reversal pattern telling you to sell the market, like a double top when the market is at 70? So even though the market is overbought, yes, the trend is down, but there is no confirmation either from the candlestick or from the chart. You don't sell, because you can break 70 to 80. We've seen where it broke 70 to 80. It can get to 80. So even when at 80, it must give you confirmation, chart or candlestick confirmation, before you go in for a sell. And that is how it is too for an oversold market. When the market is at 30 below, yes, it shows oversold, but you don't go buying the market. You must look out for candlestick confirmation and chart patterns in the forex market. Candlestick confirmations and chart patterns in the forex market before buying or going long for the market. So this is why that your trade, you'll be using trend line, using RSI, using RSI. It seems as if it's not working for you. This is because you are not following everything. Because that the market is at 70, market can break 70, heading to 80, can get to 90 without even changing direction. So leading to frustration. But when you put all these things I just taught now, all these rules before placing your overbought and oversold zones, you see it working for you 90% of the time. Remember, number one, for the rules, only sell an overbought market when the market is in a downtrend. Only buy an oversold market when the market is in an uptrend. Only buy an oversold market when the market is in an uptrend. Only sell an overbought market when the chart pattern indicates for a sell and when you have a candlestick confirmation. And only buy an oversold market when the chart pattern indicates for a buy and when you have a candlestick confirmation. So that is it to spot your oversold and your overbought levels in the forex market. So you can also use the RSI, can be used to spot divergence in the forex market. I have a video on this divergence. Look at it. You see the way we use the RSI to spot divergence in the forex market. It's very good to use the RSI to spot the divergence in the forex market. It's stress-free and easy. Can be used to get momentum in the forex market. Yes, traditionally in the forex market, you can use the RSI to know momentum in the market, to get your momentum in the forex market. Now, some school of thought, they will tell you when the market breaks 50 level, which is the middle level you see here, and above, it shows momentum for the buyers, or it shows that the buyers are, or the market will continue to buy. And when the market breaks, when the RSI breaks 50 level down, it shows strength for the sellers. And remember, that market that is overbought, you are thinking of selling, it also shows that buyers are strong in that market. And that market that you see that is oversold, that you want to rush into for a buy, it also shows strength from the sellers. So you don't just rush to the market that the market is overbought, go ahead selling it, that the market is oversold, go ahead buying it. You don't just rush into the market like that. You have to have chart pattern confirmation and candlestick confirmation in the forex market. I believe you are learning. It's not enough just viewing it, because there are so many things you're still gonna learn. It's for the benefit of the masses. Do well to subscribe, share, and let everybody know about the good news. So not only that, RSI can also, is made up of moving averages. Remember, when we applied the RSI, we saw period 14. So it's made up of moving average. By default, they bring it with a default period of 14. You can as well change the period if you wish. Look at the period I'm trying to talk about here. This is the period I'm talking about. You can see parameters, period 14. You can as well change the period, but personally I do not advise for you to change it depending on what you're looking for. Personally, I leave it at 14. So this is one of the reasons and the major things most persons secure loss trading the forex market. As a way of recap, what we traded today is simply the relative strength index in the forex market, how you can use it to trade profitably. And we established that RSI is a trend indicator in the forex market. We also established that it can be used to spot overbought and oversold zones in the forex market. Can be used to spot divergence in the forex market, which I explained how to get it. Can be used to get momentum in the forex market. RSI is made up of moving average, just the way we saw on our chart, by default period 14. So rules in trading overbought and oversold zones: only sell an overbought market when the market is in a downtrend. We established that. Only buy an oversold market when the market is in an uptrend. Only sell an overbought market when chart pattern indicates for a sell and when you have a candlestick confirmation. Only buy an oversold market when the chart pattern indicates for a buy and when you have a candlestick formation. So it's as a result of people not applying this rule. When people do not apply these rules, these 4 rules I gave here, that's when the RSI isn't working for them at all. That's when RSI isn't working for them. But when you apply these 4 rules I gave here, you see it working for you. Remember, to spot your RSI, you go to indicator list, you come to oscillator. Let me delete this one. let's delete this one. So to spot RSI, go to indicator list, you come to the oscillator, you go to your relative strength index, you can see it, you can use any color you wish. You go to parameters, period 14, levels, you can now add the levels. Remember we started with 50, 70, 50, 17, 50, 70 and 30. Now I had to add more levels. You just click on add, you add as many levels as you wish. You now okay it, you will see it at the bottom of your, or at the base of your laptop. So this is it. Do well to subscribe, share to your friends, and make sure you on the notification bell for everyone to receive. Do well to practice, practice and practice. Remember to send your questions across. If you have more questions, you can send it to the WhatsApp number on the description below. You can also chat us up and do whatever, ask some other questions you wish to ask. So thank you very much for this wonderful class. Love you.